Hello, welcome to this final broadcast in our series of tokenization of securities, while we do reserve the right to add and attach an appendices. But we've had 9 conversations with a lot of our friends around what it means to tokenize securities, talking about custody, talking about chains, talking about exchanges, talking about regulation. And what we're doing here is we're going to talk specifically about real estate, what we think will be one of the early adopters. And we have a ton of our friends here on the call. We're excited to be with so many leaders in the industry. And so we're going to go around and have everybody introduce themselves and just give 20 seconds on the role that they play in this ecosystem. So Ed, I'm going to start with you, brother. Would you give us a quick introduction?
Sure. Thank you for inviting me here, Pat. Really appreciate this. I'm Ed Nwakati. I'm the founder and CEO of RedSwan CRE. We are a tokenization platform. We have a marketplace of digital assets that focuses on strictly on commercial real estate. So we can convert real estate shares and put them on chain, making them available for investors using the blockchain.
That's fantastic. Ed, thanks for joining us, buddy. We really appreciate it. Tara, thanks for joining us again. It's always a pleasure to have you. Why don't you tell us a little bit about yourself and introduce yourself and Cushman?
Good morning, Tara Stakem, Executive Vice Chairman Wakefield. Pleased to be with you all. Thanks for having me again. Ed, we lost, unfortunately, to start RedSwan. Obviously, it's a passion for all of us, or we wouldn't be on this call. So good luck, and I know it's going to be terrific. I've been at Cushman Wakefield over 40 years. Found the passion 4 years ago when I got introduced to Inveniam and where the future of real estate will ultimately be. And it'll be an evolution that's occurring, and we're in the midst of, and Cushman wants to be a leader in it. We've invested in Inveniam, and I do sit on Inveniam's board for full disclosure, and I'm pleased to be here again this morning. Thank you.
Tara, thanks so much. Mohsen, great to have you, brother. Good to see you. Why don't you give us the 2-minute Mohsen and AKRU story?
Absolutely. Thanks so much for having me, Pat. My name is Mohsen Masood. I'm the founder and CEO for AKRU. AKRU is a platform for fractionalized commercial real estate. We truly use blockchain for the inefficiencies that it eliminates in the existing transaction structures within commercial real estate transactions. So we fractionalize real estate down to $1,000 share, enabling investors to purchase and having a secondary market for them to be able to buy, sell, and trade these shares, tokens, membership interest units on that secondary marketplace in commercial real estate. We partner with Inveniam for ensuring that we get real data that is actionable, and Inveniam turns that data at rest to truly actionable data, whereas we use Cushman for our valuations, and then we work with real estate owners and larger developers across the country in bringing on truly great deals for everyday investors, wealth managers, RIAs, broker dealers, as well as we're launching our AKRU global platform within the next quarter.
You're the man, brother. Thanks for joining us. Good to have you. Pat, always good to be with you. You've been on a number of these calls with us. Give us a little bit of an introduction to you and Oasis Pro.
Great. Thanks, Pat, and thank you for inviting me again. It's great to be on this panel and the final one. These have been a great series, and I tip my hat to Inveniam and you, Pat, for putting these together. Pat Levesque, I'm a banker, investment banker by background, 25 plus years, ran global groups at Bear Stearns and Credit Suisse, ran capital markets for First Horizon, and then got into this blockchain space. What Oasis Pro Inc., our holding company, is actually a variety of different subsidiaries, one of which is Oasis Pro Markets, which is a institutionally focused. We do retail accredited and but really focused on institutional ATS, both public and permission blockchains. We're integrated with about 10 of them right now. We also have a tokenization subsidiary. We have a TA. We have a API management dashboard. So we're like soup to nuts, everything in this space. We're also a proud investor in Inveniam, and Inveniam is also an investor in us. Yeah, I completely agree. Commercial real estate primarily is a really exciting area, low hanging fruit in this space. And, we're working hard to bring use cases to the market as it develops.
Thanks, Pat. And you used the term ATS. That's an alternative trading system, right? And that's basically a marketplace where people can buy and sell things back and forth, right?
That's right. Well, we have a marketplace for primary issuances, but an ATS is the term in the U.S. Rest of the world, it's an exchange. In the U.S., it's an exchange light.
Yeah. And thanks so much. Rob, good to have you again, buddy. Thanks for being with us. Give us 2 minutes on the role you play at Cushman and Wakefield and a little bit about yourself.
Yeah, Pat, thanks so much. I just heard this is the last of the series, so clearly you guys have saved the best for the last by including the appraiser in the group. So I appreciate that. My name is Rob Skinner. I've been at Cushman and Wakefield for 22 years. Started out as a staff appraiser, and currently I am the U.S. head of Cushman and Wakefield's valuation and advisory group. Inveniam, Tara and Pat, you brought me into the fold probably 2 to 3 years ago. I think it's exciting. So we've partnered obviously with Inveniam. You wouldn't call appraisal a very forward-thinking industry, and I'm going to bring appraisal into the digital world if it's the last thing that I do. So we are thrilled to be here. I think one of the most important things when we get to tokenization is the word credibility, right? As more investors get into tokenization, they need to know the credibility behind the values. So at Cushman and Wakefield in our appraisal group, what we are here to provide is the credibility component of tokenization.
Hey, thanks so much, buddy. Good to have you. Kerry, why don't you give us the 2-minute Kerry Rudy story, buddy?
Sure. Also a former investment banker, 30 years. I'm president of Inveniam Capital Partners, and I focus on Inveniam IO and making sure that we deliver that data to Rob so that he can produce credible valuations. That's what we're all about at Inveniam IO.
There you go. Thank you, buddy. Sam, you're up.
I'm Sam Grossman, real estate developer by trade. I now work for Pat and Kerry and Tara and everyone else on this phone. Just honored to be here amongst such an unbelievable group. Pat, great job getting all these guys together. So looking forward to it.
Thank you, buddy. So, and for those who don't know, my name is Pat O'Meara. I'm the chairman and CEO of Inveniam Capital Partners. We're an operating system for data in a fully distributed data environment, meaning how do we collect data from many different places and deliver it to computational systems or entities in order to then feed that back into a data stream where there's proof of process, and that can be delivered to an end computational system, a reporting system, or a smart contract, so that you have total observability and auditability of the sources of the data of what went into the computation and what went out, both on-chain and off-chain. One of those is compute, like Rob Skinner, or one of those computes is Rob Skinner with valuation, but it might be a waterfall. It might be setting an NAV. It might be a capital call, a distribution, whatever it is, right? How does the data flow between all these different systems and then end up in a token where the token holder can buy and they can see in this trustless environment where they can click through and see all that source data all the way down to the underlying asset as we access these new types of distribution, these new mechanisms of distribution that open up the door for viral distribution and new markets being created and new mechanisms and locations where people can buy. This is what we're trying to do. And we really think that real estate is going to be one of the very first areas where tokenization is going to take off. And I think this quarter and next quarter are going to be pretty big in this area because the market itself is in need of some help as it relates to refinancing, getting capital, and the traditional mechanisms for distributing that capital are suffering some of their own issues. And is there a more direct method that now can be taken? And I think, Ed, that comes to you. Talk to us a little bit about the creation of RedSwan, why you created it, what's the end promise, and why does tokenization of real estate matter? Why should it work? Oh, you're on mute, brother.
Yeah, great intro, Matt. And I'm very happy to be here with my former colleagues at Cushman Wakefield, because that's really where it all began. As a executive director of the advisory position for multifamily, I really had an opportunity to work with some of the larger real estate developers and property owners and some of the REITs. And we saw a lot of the problems in the industry. I mean, I saw that mounting as I'm selling properties. I'm selling a multifamily built property. Unfortunately, I would just pick up my Rolodex and call the top 15 institutions that are buying multifamily, and we get that project solved. We weren't able to really reach out to smaller investors and get them part of that opportunity. And it just dawned on me that, all the great properties, all the Class A, the really low risk type properties are going to the major institutions with the bigger checks. And that was a serious problem that I thought needed to be solved. But also on the property side, as you mentioned, there was a lot of, I would say, challenges with the property side for developers. For example, we call them merchant developers, and they have to build, stabilize, and sell. And they had to do that because they were in a hurry to recoup their capital and to also generate their promote. And so these are challenges that I felt needed to be changed. And when I went to a blockchain conference, I saw the blockchain technology at work. And I was amazed by how this could really affect the capital markets industry. And so therefore, I decided to start RedSwan to actually start moving commercial real estate in a compliant way. We're regulated with the SEC as an RRA, and soon we'll have our broker-dealer license. But in a compliant way to move commercial real estate onto the blockchain to make transactions much easier and less complicated for building owners as well as for investors. As I said, for building owners, to be able to recycle your equity in a faster, cheaper, more efficient way is good for them. You think about it, if a building owner has a property they own, they bought, and they're now trying to exit, like in today's market, it may be 6 to 10 years before they can actually exit that property. That means their equity, all their worth is locked up in that asset for many years, which is, as we all know, a terrible use of capital. I mean, it's opportunity cost is where you're not able to take your capital and put it someplace else to generate better yield. So all these issues and problems, we found solutions with tokenization. So we quickly put together a platform that now has the A to Z solution for creating digital regulated security tokens, issuing those security tokens in a regulated fashion to Reg D and Reg S investors. And Reg S investors are those investors who are overseas, foreign investors. And then also being able to manage that on a cap table, manage the cap table so their investors can see their holdings and also disperse their holdings. And then finally, as been mentioned here, the ATS, which will allow them for liquidity. So these are issues that we thought need to be taken care of. And when we first started in 2018, no one knew what tokenization was. No one even knew what the blockchain was. And so it was really difficult to break into the marketplace, but I knew that this is definitely a much more efficient way of doing business. And just in 2018, the SEC regulated that security tokens were now a useful and recommended way to do business for capitalization of equity. So we now are able to capitalize the equity of real estate as well as debt positions on real estate. So in essence, the entire capital stack of commercial real estate could be digitized and issued to investors, which we think is a fundamental change for the business, but a much more efficient way of doing business and allowing that capital flow to move on freely. But also on the investor side, you think about it, many small investors, when I say small, they probably represent close to $4 or $5 trillion in value, were reluctant to go into commercial real estate because the amount of capital necessary to go into even a Class C asset is probably $250,000 to $500,000, let alone the Class A core assets with probably $1 million to $20 million. Most investors didn't have that kind of capital, so that they were not involved, could not invest in those assets. The other issue was timing. Many people, even though they may have reserves in their savings accounts, wouldn't want to tie that capital up for 5, 10, 15 years that size. So really you had a lot of investors who were capable around the world to participate, but did not because of the fact that they're a little bit worried about having the risk of their money tied up for a long period of time. Tokenization actually helps them solve that problem because it provides that optionality of liquidity. By having a digital token and having your independent control of that token sitting in your wallet or in custody with someone that you trust or some firm you trust, you're now able to disperse and dispose of those security tokens using an ATS or other, when there are several ATSs available now for them to do that. But this is, I think, opening the door for a lot of additional investment activity from smaller investors who normally did not participate in commercial real estate. So we're really excited that we're in this industry, and we think that we're bringing a great solution. We started off by talking to smaller investors who would at least listen to us, and most of the old customers I had who knew that I wasn't crazy and I was very successful in helping them make money were my first customers. But now we're seeing a lot of major corporations, some of the largest players in the industry, knocking on the door asking to have their assets tokenized, and not just in the United States, but all over the world.
Yeah, and I think that issue of liquidity, it just matters, right? This is a new mechanism of liquidity, and I want to point out, Ed, first off, thank you, great to have you here. But it could be conceived of that we have on this call some people who are competitors, and the fact is, you guys do some very similar things, but we're in an early enough stage that this co-opetition, right? It is not a zero-sum game. We are growing the pie together because it's all about adoption. It's showing capabilities. It's showing people's competencies, of which there's a variety of them here on this call together to say, how are we going to deliver liquidity in a market that is locked up, right? So last quarter, there was 14% turnover compared to year over year just in multifamily housing. Right. So the trading in multifamily housing was down 86%. That's a shocking number year over year from first quarter. Right. And this locking up in the liquidity is partially due because people are saying, hey, this is the values, and people who don't have to sell are saying, I'm not selling. You know what I mean? So that market, what the market's doing is the lack of transaction is saying, the real people who have the ability to hold on are saying, I'm not entering that market because I'm not going to take liquidity and take this loss. I'm going to wait out this down period. The ability for us to deliver more liquidity through new means is going to open the door. And Tara, I'm going to go to you on this one. Talk to us a little bit about the macro environment for real estate right now. Talk to us about why Cushman wants to get into digital. And is this new digital venue for liquidity, is that going to open the door dramatically into what's happening in real estate today?
Yes, and let me back into it a little bit. The yes part is the largest market right out there is private market assets versus public market assets, and all of that needs an ability to have liquidity to it and to enable much greater volume and transaction work that isn't occurring now. We feel we can get in front of this, and with the digitization and the platform that Inveniam provides to allow for the tokenization to unleash more opportunities in the world of real estate, whether it be multi or we're in a market today that is, as you've just given an example of, stuck. The volumes are way down globally in a lot of categories. Multifamily tends to be up for us right now, but in the other spheres, whether it's the capital markets or the traditional leasing spheres, we're way off. And of course, we've had to readjust like every other commercial firm. our projections and our pro formas, because we think the volume of where we thought it was going won't be realized and won't be there today. So where do we find the future when we come to a circumstance like we're in today? If we were further down the road of being able to have more of these private market assets tokenized, there would be a lot more liquidity available to various investors, asset owners, and/or investors to realize outcomes different than the one today. If you've got a building that's got 3% debt, it's not going to survive at 8% debt today, right? The lenders don't want it back. The market's struggling in totality on what's the solution. And certainly where this call and what we're all talking about, where it's going years down the pipeline, had it been realized already, it would be the one thing that unlocks us all to greater opportunity to liquidity, which of course is what we care about for our clients.
Mohsen, this really gets to the heart of what you do, right? Where you're bringing individual buildings online onto AKRU, unlocking liquidity, and giving people access to get into those buildings, but also other people to gain access to that lower cost of capital. Talk to us a little bit about yourself. What is AKRU? Where are you right now? And what is the type of benefits you're able to deliver on individual buildings? But then I'd really like to kind of take this up a level and say, how does what you're delivering on an individual building impact what is we're seeing in the macro big market for people like BREIT, right? Who had to halt redemptions again. Do you know what I mean? And that's pretty big news when you have a $70 billion fund, 2 quarters in a row, an interval fund saying we're going to limit withdrawals. That's fundamental to the core value proposition of why they created it. And so tell us about what you do on the individual, and then maybe connect us up to the big picture with those big REITs, and how are you disrupting that?
Yeah, absolutely. So in order to answer a lot of that, I think my background comes in a little bit handy as well. So my background is purely commercial real estate investments globally. Being born in a real estate family, having managed real estate in the Middle East, having invested across the U.S. Over the last 12 years, and having founded AKRU 5 years ago, so April of 2018 today. I've learned, and we as a team have learned, the entire life cycle of a real estate transaction. And we formed AKRU and we started AKRU to solve for the inefficiencies of the system, right? And it may sound a little repetitive, but I'll have to take a step back. If you look at the history of tokenization is not new. Neither me nor Ed are the first ones to do this. The first asset to be tokenized was in 2015 by Meridio, where Mo Sheikh and his partner ended up tokenizing 2 buildings, apartment buildings in Brooklyn, transferred an ERC20 token from one wallet to the next, and said, voila, this building is now tokenized, and the building sits on chain at this point. The first true commercial deal happened in late 2018 in the form of St. Regis Aspen. That was, in my opinion, that was more of a vanity aspect for using tokenization, where the purpose of tokens is not really solving any inefficiencies in the capital markets. That was more of a blockchain being a solution looking for a problem, and because everyone's talking about real estate, let's do this. No, it did not solve for your distribution. It did not solve for your back office solutions. It did not solve for your investor relations or your compliance in any way or form. We saw Harbor, we saw Polymath. There've been a bunch of other big names. Polymath's pivoted a bunch of times. Harbor failed after raising $50 million. In terms of fractionalized real estate, we saw Lex Marketplaces being the most recent big fall, with after raising close to $40 million, they shut their doors 2 years in operations this February. The biggest issues that get resolved by what AKRU is doing is, one, creating that distribution, right? We're handling, through the help of Inveniam, through our own operations, some of the back office operations. We're ensuring compliance. We're ensuring reporting. We're managing the capital accounts for each of the investors. Now, whether that's on a single asset basis or that's at a larger scale, it can be done either which of the way. Liquidity that we've been talking about is the coveted holy grail that we want to go after. I think that is not something that can be changed overnight. It is not something that people will go and get today. I think what's happening today is tokenization is changing the means of the transaction. It's what Tara talked about. It's like a deal made sense at with 5%, 3%, or 4% in debt, and would not make sense in today's era of 7 or 8%, and therefore transactions don't take place. So by tokenizing these assets, where you have existing debt, which is older debt, which is still at those lower levels, you're able to conduct that transaction to move forward. Now we look at individual assets specifically, right? And we look at our clients in 4 different quarters. Those are those run-of-the-mill sponsors, operators who are going in, building, stabilizing, and selling. Then you've got mid-sized institutions and multifamily offices. They also need transactions. They need to readjust their portfolios. They need to gain. They need to get some turnover at some point in times. And if anything at all, if you're looking at the larger multifamily offices, when you're talking about third cousin Jill needing some liquidity for whatever reason because she now only has a $25,000 equity piece in this old family asset, that's where these things really, that's where the inefficiencies really start getting solved for. When you start talking about reporting, when you start talking about compliance, how do you ensure that you're getting the right information at the right time? How do you make sure that you have all the KYC, the accreditation data recorded appropriately at the time of the transaction? How do you make sure that when you're reporting capital accounts for each investor and their hold periods, how is that being reported on their tax documents? These are inefficiencies in the existing system. Just last quarter, I was sitting on a panel with one of the senior execs from Appfolio and another one from Juniper Square. The gentleman from Appfolio said, we've solved the problem and the inefficiencies in real estate investor management, because what a sponsor used to take 2 weeks to do by collecting all the sub-docs and by ensuring that all the papers are signed, we did that in a matter of 2 days by sending it out electronically on the Appfolio platform. And then we actually had to go through timestamps to make sure that who is actually eligible to participate in the deal, because we were oversubscribed. And I interrupted him. I said, you got to stop there. That's the major inefficiency. You're still going through each and every one of those things. You're still keeping the process fairly manual. If you were using the AKRU platform, the minute the last investment came in, the docs would stop. There would be no oversubscription because there's no need for an oversubscription. The deal is completed. So when you're looking at it, when you're looking at a single real estate asset from an entire life cycle perspective, right? So whether it is your initial offering, so with the offering documents going out from the get-go, to the secondary trading, to your back office management, whether it's treasury, whether it's compliance, whether it's reporting, whether it's distributions, whether it's your K1s going out, that's the only way that you get a true solution out of it, right? And that's what AKRU's built to come out and to offer to clients. And that's why we're able to bring these single assets. And because of all of those solutions being built in as a holistic solution, we're able to offer to individual investors as well as RIAs and wealth managers in smaller institutions to participate in these smaller individualized deals and not going after the funds, because they know that they've got an A to Z product with A to Z solutions, with quarterly valuations coming out, with the right data coming out, which is authenticated, which is reliable, and that's something that they can trust on as well.
Mohsen, and what you described in that scenario with Appfolio, right, where that is the delivery of a state of data against compute, an instantaneous delivery and settlement, where you're not reconciling things and looking at timestamps, and that ability to do it. What that does on the most granular scale is it changes how we store value, right? Because the ability to get in and out of something, right? All of a sudden we can use real estate instead of as long-term investment only, but as a store of value to get in and out. And I think that really opens the door. And I'm going to, just for the sake of time, Mohsen, that was beautiful, but I'm going to go to Pat. Pat, talk to us about how store of value is changing, right? When with the secondary market, right? And people are able to get out of an investment that they've gotten into. How does that change the nature of not only the ticket size, but the type of investor and the returns that they expect when they know that there's liquidity or the threat of liquidity on the back end? Do you know what I mean with that secondary market?
Sure. Thanks, Pat. It's interesting. I mean, what we're basically saying, and this is known, you need a two-sided market, right? And that's what we're developing. My view is we're several years off. We're really in the buildings, like the building blocks that you mentioned earlier, which is, we're focused on institutional. That's my primary background. And what we see is, that market developing very quickly on the tokenization front initially, and then eventually it'll get to the two-sided market. We run an order book, so that's similar to bids and asks, like with stocks and other items. We also run an RFQ, request for quote, which is how fixed income works, and a whole host of other areas. And we also run for funds, capital calls, all that, subscriptions. We've got all those different types of platforms built already and ready to go. So again, I think it's a couple of years out. I hope I'm wrong, but I think we're probably 3 to 4 years away from real success. And just to a comment you made earlier about competitors, on this panel, I don't see any competitors. So I'm not sure what you were referring to. I just see groups here targeting different areas of the market, right? Now, in regards to real estate, there's a huge opportunity in regards to raising capital if you have liquidity offering for those underlying LPs or investors, right? So that really will broaden the market, and eventually fractionalization, a lot of what people say democratization, but let's call it fractionalization, will come to the market, similar to what Edward and Motion were talking about earlier. But in order to get to that fractionalization, at least in my opinion, you need to get the institutional buy-in first, and that's credibility. And what is the institutional buy-in? They need services like what Cushman and Wakefield and Inveniam offer. Without that, the institutions won't buy in. So that's why this ecosystem is so important, right? At the end of the day, from a blockchain perspective. So, in regards to the end game, what this allows is, with fractionalization, increased access to a variety of investors, much broader than institutions eventually, global institutional investors on a real-time basis. We're registered for what's called digital cash or digital securities on our ATS, which is a little early for the market right now, which means almost instantaneous settlement. But that's what the blockchain is. There's atomic swaps, et cetera. And when we get there with valuation marks that Inveniam is providing, it's going to be on a global basis, liquidity, two-sided markets. So you go in as an investor, your valuation on that opportunity should be, rationally higher, because you have the ability to get out and further diversify. And it's not focused on a geographic area like the parts of the U.S. or the U.S. in its entirety. It's on a global basis. So that's really what blockchain delivers eventually. And that's what everybody on this call is building for. So what we're doing is, I'll give you an example. We're also in the DeFi market. MakerDAO I was involved with MakerDAO, which is a huge platform in DeFi. And we just succeeded in getting one of the largest RMBS players in the world over $200 million through the Maker process. So we're in the process of tokenizing portions of that, like the AAA piece. RMBS, by the way, is residential mortgage-backed securities.
Let's just hold on. This is a major deal, right? And I think I want everybody in the webinar to know the fact that you got a DeFi protocol to deliver $200 million to Redwood Trust, an RMBS, to fill in a part of the market that historically that has those two things, that Venn diagram, those circles never touched ever, right? And the fact that you could bring those and touch them and get that to overlap for 200 million, Pat, that's a big deal.
Yeah, well, thank you. Yeah, well, with anything in DeFi, it's every day's an adventure, right? But yeah, it is a big deal. We're I'm mentioning it to your audience here, but we really haven't publicized that because we're going to tokenize and have it trading on our ATS as well. So when that happens, we'll talk about that. Pat knows I'm a investment banker by background, so I just grew up in compliance, regulatory stealth. You don't announce things till it's completely done. But it was thank you, Pat. That was a substantial achievement for us, and we're really excited. But it's also showing institutions, major institutions, moving into the blockchain space, and that's really with Cushman and Wakefield on this call, and the other panelists. I mean, that's what this is all about. So yeah, it's very exciting. I think I answered your question, Pat.
Yeah, absolutely. And when we think about all the pieces that need to come together, right? With an Ed on a primary issuance, Mosin on a primary issuance around a building or secondary issuance, right? Whether it's you delivering an RMBS player to an existing DeFi protocol or facilitating secondary market trading. All of those rely on, for the continuing of this ecosystem, to service the asset through the life cycle of the asset and the life cycle of the fund that it sits in. And a big part of that is not just having the GP say this is what it's worth, because that creates a near occasion of optimism, right? That might not be connected. And nobody is ever going to accuse Rob Skinner of optimism. Sorry, Rob, I should have thrown that out there, right? But as you lead valuation for Cushman and you do this, how important is it for us to have third-party marks on these assets that exist digitally so that the retail buyer or the institutional buyer can come in and begin to have that real estate denominated so they can create portfolios away from these big giant chunks into broad, diversified bets for institutions, but also individuals coming in and knowing that there's a brand that they can count on that was giving a mark that they can see the source data. How big is that?
It's critically important, right? I think you keep hearing the word liquidity, right? Liquidity is the most important thing we have to unlock what is literally trillions of dollars of private market assets. You need frequency in the market, you need accessibility to all in the market, and you need credibility. You need those three. Those are the three legs of the stool, right? As a third-party valuer, what we bring is an independent, unbiased opinion of value. And it is an opinion of value. We've talked about this before, right? It's not a fact, it's an opinion of value. My opinion is different than your opinion. But if Sam, who is a developer, suddenly wants to issue a bunch of LP shares and the value he puts on them is because Sam said so, maybe Sam is an aggressive developer and maybe you're okay with that, right? The key piece to bringing greater visibility and liquidity to market is to have that independent, unbiased opinion of value. So by using Inveniam tools, by using our experts, it's a tough time right now, the value right now, right? There's no transactions happening. It is exceedingly difficult. What we can do right now is provide that market intelligence to our clients and really bridge the gap. Pat, you said it's important for the institutions. I would argue that most institutions and institutional investors have a pretty good handle on value, right? They understand cash flow. To me, the credibility piece is even more important when we start to bring in those smaller, less sophisticated investors, right? If your uncle wants to buy a $10,000 token, the credibility to him, I would argue, is even more important than the credibility to a Nuveen, right? Nuveen understands value. Now, they still need me to put the value on there, but in order to unlock, I think, what is enormous potential in the market, it is that normal, everyday, less sophisticated investor where the credibility is absolutely critical to convincing them to put their hard-earned capital into a market that maybe they don't fully understand.
Hey, Rob, let me also throw, I agree with you, but I want to expand something that you said. And by expand mean I'm going to disagree. And so
fair. I understand how this works, Pat.
Yeah. And so, but I want to push on this. You said it's important for the individual, which I agree completely. But let's say you're a sovereign wealth fund, right? You're a Malaysian pension fund, KWAP. Your ability to come into the U.S., you are limited to certain geographies, right? You are limited because your bite size is so big, right? You have to come into New York, Chicago, LA, Dallas, Miami, and you've got big bite size if you're going to deploy, right? The ability for you, Cushman and Wakefield, marking assets in Topeka, in Des Moines, in Oshkosh, right? In St. Paul, all of a sudden there's geographies that they can begin programmatically buying on a broader base, then they can expand to geography. So I think that's where we're going to see it. Not necessarily that they don't understand value in New York, because they do, but as all of a sudden they can start relying on the experts in additional geographies. So I would say it's both and a little bit. Is that a fair statement?
Yeah, no, I'm not diminishing the institutional piece, right? I think that, there is a market value assumes equally motivated buyer, seller, equal knowledge, et cetera, right? So no, you're right. I mean, the institutions, particularly the overseas institutions, they all understand the gateway cities in the U.S., right? It's those tertiary markets, or I think I sit in Boston. So Portland, Maine, for instance, is one of the hottest markets in the Northeast. And most people would say, where the heck is that? So the ability to understand whether you're a private investor or you're an institutional investor, maybe getting outside of the 6 gateway markets that you're most comfortable with is critically important.
And that it really is going to change how we think about this. And Kerry, I'm going to come to you on liquidity, because there's been 2 comments on this that we've talked about. We have people bringing primary, there's secondary markets out there, there's third-party marks. And Tara gave the very good example of the building works at 3%, it doesn't work at 8%. The reality is that might be the market of where banks are lending, but 8% is not what people are earning in their money market funds, right? And when you deploy money and you're scared, your cash deposits are at a bank, you're scared. Right now, the banks are the shock absorber for the debt component, right, into the markets. How do we change the dynamics around individuals storing their cash in real estate in either part of the capital stack? Do you know what I mean?
Sure.
And is there efficiency is there an ability to bring more efficiency into the capital stack and into the yield curve between the depositor and the lender, right? By making efficiencies in that space, taking out some of that default risk, which is, spread out among so many. Go ahead, Kerry.
Yeah, no, absolutely, Pat. In fact, there's $2.9 trillion worth of commercial real estate debt that needs to be financed over the next 24 months. And with what's going on in the banking sector, Silicon Valley Bank, lending standards are going to get tighter. LTVs are going down. You got a $75 million loan on a building that needs to be refinanced, and that's at a 65% LTV. And a commercial bank on a senior lien basis, maybe today, will only give you 50%. Where are you going to come up with the rest? And as a former investment banker, there's structured products that have been created over past couple of decades in order to bring in non-bank lenders to kind of fill that gap. What we're going to do is use those mechanisms, apply today's technology, Inveniam IO on the data side, to deliver better data, transparency, and trust to Rob, who's going to deliver valuations that will then allow those firms, those non-bank lending firms that can step in the middle to be able to make markets, because we're going to tokenize and we're going to be able to list those. Pat Levecchia, I would say that we're going to challenge you on your, 3 to 5 years out. We hope to bring that a lot quicker, because we believe with more transparent data combined with tokenization, and financial institutions that are also building platforms and want to become market makers can rely on the better data, the more frequent independent expert valuations that will deliver transparency that then through structured products will enable high net worth investors that are investing in mutual funds that are earning whatever they're earning today, 3.5%, and get a higher yield than they're getting on their money market funds, but lower than what the banks are charging.
And if we can have a mark on that asset where we have somebody like a Deloitte setting that, and that's trading for 2 hours on a monthly basis, and I'm taking that in, and that's a loan, and I can see where that is on the cap stack, above the senior or below the senior, above the equity, and there's a new piece in here, or it's just unitranche taking out the whole senior piece, and it's trading monthly and it's marking monthly, and we're feeding the risk book with the best data it's ever seen. That suddenly gets held on your balance sheet at a whole new level as a level 1 asset. Forget level 2. We just blew through that. Level 2 would be for the equity, but that senior piece, all of a sudden there's a monthly mark because it is trading on a monthly basis where that window is open, right? This is where you're going to see big institutions, non-bank lenders, large sovereign wealth funds coming in and saying, I'm going to deploy capital at scale, and I'm going to be refinancing and taking some of those economics by not being inside a packaged product, right? And what we're doing is we're decentralizing what was this securitization model of the 90s, but delivered at scale and at speed, right? And what was created in the 90s, I should say. And Sam, I'm going to go to you real quick. And this is, Pat Levecchia, we're kindred spirits in many ways. We've been trained by having been hit in the back of the head with a 2x4 so many times, right? Because we have predicted that next quarter is going to be the quarter, right, for tokenization. And we predicted that for 4 years. Tara, I think we said it was going to be next year when we first met 4.5 years ago, right? And it was going to be next year, and it's going to be next year. And so Pat and I learned, along with Mohsin and along with Ed, right, hey, it's good. It's going to take 2 or 3 years. And we're doing that as a management exercise with investors. But the reality is the macroeconomic environment is such that early adopters have real economic incentive to try something new. And there's infrastructure ready, right? Ed had a great idea, but wasn't really ready 2 years ago. Mohsin had a great idea, but wasn't really ready 3 years ago. You know what I mean? We just weren't. But now we are. The systems work. The plumbing is connected, right? What is the timing? Is it 3 years out? Is it 1 month out? What are you seeing, and where do you think we're going to start seeing this real estate trade?
Thanks, Pat. It's I hate to disagree with Pat Levecchia because or Pat O'Meara, because I'm always proven wrong if I do. But a year and a half ago, Mohsin, Ed, and I were at a conference educating people, talking about the talking about 2-3 years out. The fact is, it's now. Assets are being tokenized. Now, yes, it's on a much smaller scale. The dollars that we're talking about are not the institutional, 9-figure numbers, 10-figure numbers that we're talking about actually moving markets. But you have to start somewhere. And the fact of the matter is that, who in the world right now wouldn't raise their hand and say, oh yeah, I'll take 4.5% on a bond that's backed by real estate and provide real data, better data, source data that's pushed into a system where Cushman and Wakefield has given a snapshot in time. They didn't just pull that out of a hat. That's based on actual data, credential data, verified data that's updated through Inveniam IO on a monthly basis, that Mark is updated on a quarterly basis. And all of a sudden, you're not talking about a GP doing a mark to market at his desk. These are verified values backed by data, backed by a real asset that you can touch, a physical piece of real estate. There's nothing better than that.
Hey, I'm going to take that. I'm going to take what you're saying, and just, we have 8 minutes left, and we're going to do a lightning round. We're going to go hit everybody in our last 8 minutes. Tara, I'm going to start with you. Cushman and Wakefield has, over your life cycle, embraced new cycles and new technologies and new mechanisms to care for your clients, which allowed and drove growth. You announced this. Cushman & Wakefield's an investor in Inveniam. Why is Cushman & Wakefield going digital? And is this the right time for it?
It most certainly is, and mainly because the voice we hear back from our clients is they want to go digital, and they have in mind tokenization down the road for liquidity purposes. We all saw, for our firm, it was going global. It was, before then, it was going into project management and constructing buildings on behalf of our clients around the globe. But today, our view is that the next transformational moment for the firm will be making sure our clients have greater access to liquidity. They digitize, right, and get on a financial infrastructure that will ultimately allow for the 24/7, 365 days, right, where, as we've noted on this call, it's done in a distributed ledger with smart contracts. It's instantaneous. And the evolution of what we all do every day is going to change overnight. And big players are coming to us, asking to partner with us in this arena. And as you mentioned, Pat, earlier, that's what it's going to take, right? When the big movers and the big voices that everyone else tends to hear and follow start to make these major announcements, which we think will happen later this year, all of a sudden what took us 4 years to get to today is going to take 4 months to get to the next major step in what we're evolving into.
Mohsen, you've been blazing a trail for years with the machete, clearing a trail where nobody else was going and being a leader. And that's hard, it's difficult, it's painful, but the reality is you've cleared a path at this point. There is a path. It is visible through the woods, right? And you're seeing successes. Talk to us, give us 30 seconds. What are the successes you're seeing in the market, and what's AKRU's view on what is the acceleration happening? What are you seeing?
Yeah, it's a whole bunch of what all of you talked about. It is a two-sided marketplace. It has to be a good balance of assets as well as investors that has to be achieved. You can't just start filling in one side and then expect the other side to come in. You can't just build and hope people will show up. And that's what AKRU's been doing, right? We've been able to achieve 55,000 plus subscribers on the AKRU platform in ways of credit investors, which has been an uphill battle. We've built a pipeline of truly commercial deals of over $480 million of commercial real estate ready to go on the platform within the next 2 quarters, provided we have the right distribution partners for it, right? $480 million can't be distributed through 55,000 individual investors. The institutions need to come in and play, and that's why we brought in the AKRU private access piece for the lower end of the institutional money, or the money managers to come in and start allocating money. In terms of the outlook on the industry, tokenization didn't, in my opinion, did not. You don't see the adoption on tokenization because, as you said, the plumbing was not there, or the solutions where it was being implemented, it wasn't a full solution. It was either being used for the vanity of it, or for a conceptual purpose, or people have talked about solutions that they've built, but they don't have the technology behind it. Now that a lot of the solutions are built out, now that there's we've built a product which is there specifically for the real estate side that offers that secondary trading. It's my core belief, and that's been one of the reasons for success for AKRU, is that real estate would always be an OTC product, and it would never be a bid-ask matching service. And that's how you have to move forward, and we're doing so if we really want to see success on the real estate side, real estate fractionalization and trading side of things. Fractionalization's existed for hundreds of years, but in this new method, in this new way, till people cannot, it's not just that getting that standard valuation on there, which is extremely, extremely important for setting that baseline, but the ultimate value for a trade is completely dependent between the buyer and the seller, no matter how big or small that buyer and that seller is. And that's the pathway to that liquidity.
And there's generational issues. There's people's willingness and familiarity to deal with technology, right?
Yep.
We've been able to pay with our phone by touching a phone to something for 7 or 8 years. When it first started, everybody was talking about it, but it's not until the last 24 months that really in America, people have begun using that as a mechanism of payment all the time. So the technology has to exist, then it has to become comfortable, and then people use it. The good news is we have a macro environment driving us right now. And
Pat, I think, I'm sorry for cutting you off, but taking your example forward, it's also the fact that the market needs it right now. Using Tara's example again of 3% and 8%, now the market needs it. Mobile payments, NFC payments were in Africa 8 years ago. The first countries to adopt mobile payments were some of the smaller African Saharan countries, purely because they had more unbanked people who needed a means to transact. Similarly, we are at that point of inflection within real estate transactions because we're at a place where we need a new means to transact, and the old guard does not exist anymore. So that generational change happens with a need that is there, and that need is there now.
And let me tell you right now on this, when everybody here got their first ATM card, how many times did you go to one and you realized, oh, this isn't in my ATM network, right? Like that, we used to have to look on the back of our card and say, oh, this is a different ATM network. Are you on Ethereum? Are you on Polygon? Are you on Tezos? In 5 years, nobody's going to care. But let me also say, Cushman Wakefield, JLL, CBRE, your brokerage branch by itself, unless you're embracing digital, is going to be like one of those brands on the ATM machine, right? And we've got to see that, right? And Rob, as you embrace, let me give you 30 seconds real quick, but we got 2 more people to go as well. Give me kind of your 30 seconds on what's digital going to do for appraisal.
So it brings efficiencies, right? And we've talked about this before. If we can, if I can take and automate as much of the mundane process and have my valuation professionals focusing on exactly what they do, right? Coming up with a credible, independent, unbiased value. By, the pipes, as you refer to it, like Inveniam, right? Connecting me with AKRU, and the data is flowing back and forth. That speeds up and gives efficiency to my team. It allows me to provide a more cost-effective solution. It provides the technology. It provides for greater frequency, right? Part of the liquidity conversation is more frequent marks, right? You're not just appraising something once a year, once a quarter even. If we're providing monthly values and, at some point we're going to go to daily valuations, right? Greater visibility into the value of an asset inherently creates greater liquidity.
Beautiful, beautiful. Ed, give me your 60 seconds on what are we going to see in real estate tokenization in the next 12 months?
Well, I think you guys covered a lot of it here. We talked about having large brands, institutional brands get involved in industry, and I'm welcoming that. We're seeing a lot of brands coming in, being a part of our process. When you talk about the initial asset inventory large institutions tokenizing their assets. That's helping one side of the equation. When you're talking about valuation and due diligence, we're seeing Cushman Wakefield, we're seeing EY on those levels. And when we start talking about distribution, we're seeing large distribution partners as well in the security broker dealer industry, family office, and RIA industry. So I think one thing we didn't talk about here is that we're actually opening up the markets globally. So we're making this accessible for global investors who have a lot of capital to bring into U.S. assets and vice versa. I mean, we've just taken on a very large assignment in Qatar, which we're using Cushman Wakefield to do a lot of our valuation in that market because we're not familiar with it. But we're seeing for the first time, investors will have a real ETF opportunity to be able to buy assets around the world, compare values around the world, and also have the credibility of these brands who are telling them that these assets are okay. So we're seeing a lot of benefit there. But if you look at foreign countries like Japan that has $23 trillion of cash sitting in their banks and looking for investments, these are opportunities that I think we're actually bringing to the table.
Yeah, absolutely. And I think, Pat, I'm going to ask you two things. Number one, is this U.S., is it global? Which one's first? Two, when do we reach maturity? And what are the steps we're going to take along the way towards maturity?
You read my mind. I'm going to try to do this in 30 seconds, Pat. All right. So first of all, thank you for being here. I completely agree with Tara's comments earlier. I think it's, the rest of the globe, as always, is always trying to move quickly to get ahead of the U.S., but the U.S. is resilient. So the U.S., in my opinion, is 3 to 4 years out. But big announcements are coming this year in tokenization. Hopefully, we're part of several major institutions. 3 to 4 years out, I think it'll become more ubiquitous. I'm not saying that we're not going to have tokenization. I'm just saying of a scale that it's worthwhile being in the business. And I shot over 30 seconds. I'm sorry. But I think if you look at the Citi research that came out last week, where which was fantastic, they estimate 20 trillion in size real estate funds by 2030, of which 1.5 trillion will be tokenized. And overall, they believe there'll be $5 trillion of tokenized assets on a global basis. I look to that. So when I say 3 to 4 years out, well, it's going to be like the dam breaking, right? And initially, it's all going to be permissioned, not public. We're involved with public blockchains. We have investors who are public blockchains. But from a regulatory environment, especially here in the U.S., the SEC and FINRA have been very clear they don't trust the public blockchains. So it's going to be permissioned in the near term, and then eventually it's going to be all the public. So I think in 10 years it'll be, or less than 10 years, it'll be ubiquitous. So I'm in line with Citibank 2030. This will be, like you said, in 5 years, who cares what platform you're on? It'll be a similar UI to what we have today. And that was 2 minutes. So I apologize, Pat.
That's all right. Hey, I want to thank everybody. We didn't even go to the audience for questions. It was great to have all of you here. It's going to be exciting to watch this develop. Thank you all so much for being a part of this conversation.
Thank you.
Great. Thank you.
Please.
Happy Easter. Happy Passover. Thank you, everyone.
Happy Easter.